This episode of My Two Satoshis is brought to you by Volume.io. Volume is a multi-sector enterprise and B2B platform which allows companies to rapidly scale and grow internationally by leveraging all the power provided by blockchain technology. Through their highly rigorous vetting process, only the highest quality companies are allowed. With Volume blockchain platform, companies can track, route, identify, and source all of the activity that happens on their supply chain. Visit Volume.io for details. Yeah, it's your boy Crypto Blood. Yes, people, I'm back in the studio. Welcome to another episode of My Two Satoshis. It is April 28th, 2019. Shout out to my man Cryptic Q for the song request for today, Dead Prez. RBG, that's Revolutionary But Gangsta Till I Die. Shout out to you, bro, for that one. Good song request there for today. Hope you guys are doing well on this Sunday fun day. And again, welcome to another episode of My Two Satoshis. And so the first quick article that we'll review for today is coming out of News BTC, and it is about XRP. A prominent analyst claims that it's do or die for Ripple. So we'll take a look at that. I think it's more so from a technical standpoint, not so much fundamentally. So we'll take a look at that article really quickly and let you guys, I'll drop a link in the video so you guys can read it fully if you want. You guys know I'm not a fan of XRP at all, and it's more so from an ethos standpoint. You know, so many people have come into cryptocurrencies because of XRP. And I just think that's the wrong way to be introduced to cryptocurrencies. You should be introduced to cryptocurrencies through Bitcoin and then go from there and figure out, you know, other cryptocurrencies that may be better than Bitcoin, so on and so forth. But definitely coming in with, you know, through the perspective of XRP is horrible. And then secondly, we'll take a look at an article out of Cointelegraph. This is pretty concerning to me. Somehow a hacker has found the ability or way to hack and guess secret keys on Ethereum's blockchain. You know, when you create a new wallet, it automatically, through their algorithm, generates a new private key, a private and public key. Public key is what you give to other individuals to receive funds. The private key is the key that you use to send funds. Well, you never give out your private key, right? But this person, these hackers, have found a way to steal millions of dollars of ETH by guessing private keys. So we're going to take a look at that article. That caught my attention. I definitely had to take a look at that. And the third article that we'll fully read today is out of CCN, and it is about the Chainalysis company. If those that don't know who Chainalysis is, it's a company that was founded a few years ago. They found out a way to, through AI and algos, analyze the blockchain of Bitcoin and start to tie transactions together with different wallets to build like a profile of individuals. If it actually comes to a wallet that is on, let's say, Coinbase's a database or any other exchange, they can start to link those transactions that weren't from within Coinbase to you. So Coinbase has used them. I'm sure the government, I think, has used them as well. But I just wanted to give you guys a heads up. There are 10 cryptocurrencies now that they are snooping and investigating. So I just wanted to give you guys a heads up on that so that you know what's going on out here. It's no longer just Bitcoin. Before we get into those articles, let's take a look at that market cap. We're currently at $171 billion. Bitcoin's dominance is still kind of up there, 54.5%. And I showed you guys the last time we did an in-studio My Two Satoshis video. I said, hey, this is the area that we have to watch. Since we broke this was the area. And guess what? We are right there. So we're kind of bouncing off that. It's critical levels now for Bitcoin. Because let me tell you, we break this area, people, guess what? We're going probably down here, which is $145 billion market cap, which isn't too bad percentage-wise. It looks worse than it is, but it definitely will take us further down. So let's go ahead and take a look at that first article. It's just a quick review. A prominent crypto analyst claims that it's do or die for Ripple. and it really is do or die for Bitcoin in some perspective, just a short-term price perspective. It says Ripple's lackluster price action over the past several months has left many XRP investors with a feeling of disappointment. So then it goes on to talk about Ripple dipping below 30 cents during the recent market downturn. And if we take a look at his chart here, as you see, it broke that. And it really is very similar to the breaking of the market cap trend line that I drew for you guys. So further down, he says here, it's do or die for Ripple. And there's a pennant that he drew here, and we're right there. So it says here, do or die time for XRP bag holders. So we'll have to see what happens here. I'll leave a link to this article so you can read it in full detail and make up your own decision about XRP and its current price. First article, though, is about that Chainalysis company, the crypto detective firm out of CCN. It says here that they are now snooping over 10 cryptocurrencies. It says here, blockchain analysis and compliance firm Chainalysis wants to provide its users with the ability to perform investigations and keep tabs on 10 popular digital assets, including Bitcoin, Ethereum, and Binance Coin. Wow. In a post published on its official blog on April 24th, the New York-based blockchain firm announced that it is expanding its monitoring tools and the scope of its Chainalysis Reactor and Chainalysis KYT, Know Your Transaction Analytics tool. Wow, this is just so far away from what crypto was intended. It says here, real-time monitoring. Chainalysis is a high-profile blockchain intelligence firm which provides various technologies to help organizations monitor the flow of cryptocurrencies on multiple blockchains and track any transactions suspected to be in connection with terrorist financing and money laundering efforts. It's funny because I told a buddy of mine, he asked me randomly, we were at the cigar lounge, he's like, hey man, why would Coinbase shut a friend of mine's account down? I said, well, what happened? He was like, he deposited money from a gambling site into his Coinbase account, and then next thing you know, boom, his account has been terminated. They gave him X amount of days to withdraw their funds. I said, hey man, Bitcoin is pseudo-anonymous, but it's becoming less and less anonymous because of companies like Chainalysis. They can do analysis on wallets that maybe come from gambling sites or whatever dark web stuff you're doing. If you're sending those funds directly to Coinbase, their Chainalysis technology, leveraged by Chainalysis, will be able to flag them of that type of transaction. And what happens is, guys, when you deal with those types of dark websites and they're using the same wallets over and over again, your funds become tainted. It's called tainted. And when you become tainted, now you've got a bad mark on your trail, on your wallet. So you guys got to know what you're doing out there. Make sure you start doing a little bit more research if that's something you want to do, and still keep like a Coinbase or one of those more official government run or watched entities. Article goes on to say here, with the new release, Chainalysis users can simply enter the name of a service into any of its analytics platforms and see its connection with 10 digital assets supported. You can now enter the name of any service in Reactor and see it represented across all supported cryptocurrencies. Once added to the graph, flows between addresses are mapped using an intuitive user interface overlaid with context from on and off the blockchain. KYT customers can monitor their organization's total risk exposure across all supported currencies. Wow, supported currency. So here's the details. This is the nitty gritty here. The firm's notice points out that the digital assets supported by the Reactor include traditional cryptocurrency assets, of course, like Bitcoin. That was the first one they worked on. Ether, that's Ethereum's. Paxos, Litecoin, True, which is True USD, the stablecoin, and Binance, as well as stablecoins Gemini Dollar, Tether, and USD Coin. The announcement also confirmed that Chainalysis is working on adding more currencies within the next few months, in part The company said, "We've identified thousands of real-world services, including top exchanges, merchant providers, darknet markets, and scams. Our team makes hundreds of new identifications every month, increasing data coverage by millions of new addresses." Welcome, Big Brother, to blockchain. This is crazy, people. And this is why we have to be diligent in, educating people on blockchain and why we need to keep it private, like our own. We need to be able to do what we want to do with our money. And that's what Bitcoin initial intent was. The article goes on to say, according to a related report on news platform Reuters, the expansion of the company's monitoring tools are reportedly in anticipation of global cryptocurrency regulatory guidance, which might request the crypto-based firms should automate their process of monitoring transactions on the crypto assets that they support going forward. As central governing bodies don't control most digital assets, it is necessary to have a way of tracking transactions as they are conducted to curb any trafficking and terrorist financing efforts. Chainalysis is looking to get ahead of that curve and hopefully provide an incentive for global regulation. Well, they'll be able to do it for now, but there are definitely methods out there that will scramble your transactions where no one would be able to track it. So thank God we at least are in an environment where they can't freeze your stuff if it's not on an exchange. They can't freeze your wallets. They can't do any of that. Maybe they can taint it, right? Or show that it's tainted, but they won't be able to freeze it. And so with that one thing, that gives us hope, people. That gives us hope. I'm telling you. So you guys let me know your thoughts about Chainalysis. If you've heard of it, do you think they're going to have any success going forward as more and more methods come up for keeping your coins anonymous and private as they should be? Just because you want to keep private doesn't mean you're doing illegal things. It's just that you don't want to be tracked as we are currently on a day-to-day basis in this current paradigm. Second article is out of Cointelegraph. It says here, blockchain bandit, how a hacker has been stealing millions worth of ETH by guessing weak private keys. This is insane, people. Earlier this week, United States-based security consultant firm Independent Security Evaluators published a report on private keys for the Ethereum blockchain. Despite establishing around 700 weak keys that are being regularly used by multiple people, the researchers found a blockchain bandit who has managed to collect almost 45,000 ETH by successfully guessing those failed private keys. Cointelegraph interviewed the senior security analyst at ISE to find out more about what they described as ether combing. The analyst says he discovered the hacker by accident. At the time, he was doing research for a corporate client that planned to implement their own wallet with an integrated key generating algorithm. Private key generation was one of the components we had to research, and I was going through the basics of what is a private key on Ethereum. How large is it? How it is generated, and how it is used to derive the public key and public address. On Ethereum, Bitcoin, or any other major blockchain that supports the ECDSA, which is the elliptical curve digital signature algorithm protocol, private keys are represented by a 256-bit number. The ISE narrowed it down to 8 32-bit subregions in the 256-bit key space during the research. Because brute forcing a private key within a large region is meant to be a statistical improbability, those 8 sub-regions contain an overall amount of 34 billion weaker keys, which the ISE subsequently scanned. It is worth stressing that those keys were generated due to faulty code and faulty random number generators, and the researchers were specifically targeting suboptimal keys. The analyst went on to say here, why are people using the private key of 1? That shouldn't be possible. His team started to scan more keys to see how widespread the problem was. Although the ISE researchers had established that this issue is not particularly omnipresent, they had found as many as 732 weak private keys associated with a total of 49,000 transactions. Roughly, there's about 50 million keys that have been used on Ethereum, and we've only discovered 732 of them. As mentioned above, during their research, the ISE team noticed how some of the wallets associated with the private keys found with their suboptimal methods had a lot of transactions going to a specific address and no money was coming back out. He said there was a guy who had an address who was going around and siphoning from some of the keys we had access to. We found 735 private keys. He happened to take money from 12 of those keys we also had access to. It's statistically improbable he would guess those keys by chance, so he was probably doing the same thing. He was basically stealing funds as soon as they came into people's wallets. So he goes on to say here that the hacker or group of hackers had set up a node to automatically swipe funds from addresses with weak keys. To verify that, the researchers used a honeypot. They sent $1 using a weak private key, which they knew the hacker was aware of, to see how fast it would take them. The money was gone in a matter of seconds. Wow, that's crazy. So this article is pretty long, and I'm not going to read the entire thing, but something, if you guys are on the more technical side, would definitely be interested in. So I'm going to finish up reading a couple of more paragraphs of this article. It says here, according to the Analyst, private keys tend to be vulnerable due to two main factors. The first is coding errors in the software responsible for generating them. Secondly, some crypto owners have a tendency to obtain identical private keys through weak passphrases such as ABC123, or even leaving them blank. That's, of course, if you're creating your own private keys, like on My Crypto Wallet or some other type of Ethereum wallet generator where you have control over your passphrases. On exchanges, they do a fairly good job of making sure that the outcome of your private keys is very strong. It says, for instance, the ISE report established that one of the most popular weak private keys is one generated from an empty recovery phrase using the Parity wallet. There have reportedly been over 8,700 transactions on this address with a total of 5.2 million ETH transferred. For a while, Parity let you use the default password of nothing and it would generate the private key based on that. He goes on to say that now he thinks they've introduced a minimum password requirement. Since then, it may be just a single character, but you can't use blank passwords on Parity right now if you're using the latest version of their software. No wallet creators have contacted ISE yet, according to the Analyst. There you have it, people. Make sure if you're creating your own accounts, your new, your own Ethereum wallets, do not leave those passphrases blank. Don't, use something very complicated, please. Don't let these guys get your money that easily. So I definitely wanted to just cover those 3 topics for today on this Sunday. I'm going to go ahead and enjoy the rest of this day, watch a little game 1 of Golden State. Can't wait for that. It's going to be a good series, Golden State versus Houston Rockets. Shout out again to my man Cryptic Q for that song request for today. Make sure you guys like, share, and subscribe. Click that bell, all that good stuff to support this channel. My 2 Satoshis for April 28th, 2019. I'm out of here, people. Holla!